Welcome to Fibocan's YouTube channel. You have done the right decision in your life by coming into Fibocan's YouTube channel. Who is Fibocan? Fibocan is a wealth enabler. How do we enable wealth? We enable wealth through training, coaching, mentoring, enabling students, investors to devise their own investment strategies through our comprehensive training programs and innovative investment strategies. So what do? We have published educational videos 1 to 16, module 1 to 16 in English and Tamil. The modules that start from basics of banking, capital market, investments, how to do investment, technical analysis, options, futures, then strategies of options and futures, and finally income tax on derivatives. To begin with, all these 16 modules are available both in English and Tamil. I would request you to go and select the appropriate playlist and watch all the videos and put your comments. So that is the step one. Every day we put videos about market commentaries. Please understand that we are not SEBI registered. Hence, we cannot give any recommendations. We will say whether it is looking good, technically sound, technically weak, has to be cautious. These kind of things we will give, but we will not give any price targets, or we will not give any stock recommendations. Only thing is that we are here to give technical education, imparting technical knowledge to anyone and everyone through our free educational videos, which we put every day on the daily markets, and during weekends we put about global markets. So I would request and encourage anyone in the age group of 17, 18, those who are studying in HSC, higher secondary or plus 2, to watch module 1 to 4, definitely either in English or Tamil, whichever language you understand out of these two languages. And anybody who is doing BA, BCom should watch up to module 8. And those who are doing MBA, CA, CFA or any professional or postgraduates should watch module up to module 15. And for professional traders, it is ideally suited for them to watch module 16. I am sure that you will enjoy watching and enhancing your knowledge. Thank you very much. Today is March 13, 2024, Wednesday, option expiry for BankNifty. First the levels, what candlestick form, then the power of technical analysis. FinNifty, it closed at 2758.20, 0.67% down. It formed a FinNifty, formed a solid red candle, and it is below all the key exponential moving averages, but just managed to close above the Bollinger Middle Band and the 20-day exponential moving average. So probably we'll see whether tomorrow it is going to act as support. BankNifty on the other hand, it fell 0.64% down, 46,981.30, same story as that of FinNifty. Nifty on the other hand, the fall was severe. It was the bears hammered the bulls like anything. Bulls were running for cover. It closed at 21,997.70, 1.5% down. Solid, very big red candle, and it closed below the Bollinger Middle Band and also the 20-day exponential moving average. In fact, at one stage, it went as close as to the 50-day simple moving average. From there, it formed a slightly leg is visible, lower leg is visible. Hence, no, it moved up slightly. That's what it is. So, the power of technical, before we go into the discussion, the power of technical analysis. Yesterday, if you recollect, what did we say? We had categorically said that the BankNifty, the support is going to be, while we had said that very clearly, yesterday all the indexes formed a Doji with a very big upper wick and a lower wick, or a spinning top, whatever it is. Both are one and the same. It is basically indecision. Many times we are told, in our educational video also we are told that if there is an indecision and with such a high upper wick and such a lower wick, the moment they decide, who is the they? It is the market players. We all the market players. They decide to move in a particular direction. The movement will be ferocious and forceful. That is what had happened. So many people say, no, oh, this happened, that happened, oh, LIC should intervene. Somebody, Twitter, when I go to Twitter, all these stories. When I go to WhatsApp group also, all the same stories. When market goes up, nobody wants any intervention. When market goes down, everybody wants intervention. I suggest, no, these people, they are better off in going for FD. Okay, because they have to understand one thing. These These are all pure market forces. Market in a free or fair market, the demand and supply determines. So anyway, that's a different story. So the 50-day simple moving average is the support which we had said, because it is very difficult to break that that easily. It is not possible for the market to break down. It never went below there. On the upward side, whatever level we said, it never went there. So hence, no, you can understand the power of technical analysis. That's what I tell people. If you want to trade, if you want to invest, again I say that, no, what is big joke in investing? You buy any stock, and in fact, no, when a fall of today's nature happens, you buy the bluest of blue chip stocks. It's going to go up one day. If not tomorrow, it's going to go one day. The reason is very simple. As I always explain, every company will show a sales of net sales of 18 to 20% increase over the previous year. That means it will translate ultimately into PAT of 6 to 8% at least. That has to reflect in the share price. And once in 5 years, we will have a re-rating. The discounting will improve. Hence, the market will double. So hence, there is no big deal in investing. So if somebody wants to be an investor, please by all means, but or go to a mutual fund. But if you want to trade, please learn technical analysis. Okay, there are many tools, many free educational videos, tools, articles that are available, but please master it. Anyway, with that background, let's go into that. So that's the power of technical analysis. Nifty, what happened? Today's performance, if you recollect, it formed a doji. That means it was ready to fall. It was like a, what do you call, I always say that, like when it goes up, the tiger is what do you call, hiding to pounce. It's something like that. No, yesterday it was formed sideways, it formed to have a big fall today. That is what had happened. The reason is very clear. As I told you, yesterday's spinning top itself told that it was indecision. So with that, let's go now. So now Nifty, what is the levels? That is very important, because Nifty is at a crucial level. In fact, it is just a striking distance of the 50-day simple moving average and the Bollinger lower band. So hence now, of course, tomorrow there can be a good short covering rally that can come, because BankNifty and FinNifty, they are holding just above the 20-day moving average and Bollinger exponential moving average. 20-day moving average, 20-day exponential moving average and Bollinger middle band, which is nothing but the 20-day simple moving average. So hence there will be a bounce back that is possible, but the trend from up, it has definitely turned negative. Not today. The Monday's candle or Friday's candle, when it formed a doji, and Monday when it formed a solid red candle, the trend reversal has started. Now it will take support at these levels, and then it will try to consolidate here before making the next move either on the upward or lower side. One more thing we have to see is Nifty, what happened? All this while it has been riding along the Bollinger upper band in the monthly chart, but now what had happened? It has given way significantly. It is below that. There is a huge distance between the current price to the Bollinger upper band in the monthly chart. Hence, like what you call, I feel that now once again going and touching the Bollinger band should be a Herculean task for Nifty, unless otherwise we see something dramatic happens in the next few days. With that, let's go into the details. Banks, Axis Bank fell 1%, Federal fell 2%, along with IDFC, Indus and SBI. Bandhan Bank fell 5%, Yes Bank fell 8%. ICICI and Kotak moved up by 1%. So today's, if I were to use cricketing analogy, today's was like a seeming English pitch where many of the batsmen, almost every batsman struggled to score even double digits. There somebody scoring 50 is something great. So I would call anybody moving up around 1%. Not exactly 1%. When I say 1%, it means 0.5 or 0.6 to 0.9% around this level. We consider it as 1% move. So anybody moving or staying positive itself is a fantastic. It's something like, if one were to recollect the Dilip Vensakar's innings of 1986 England series, where every batsman struggled to bat, whereas Vensakar was scoring centuries, back-to-back centuries. Anyway, that's cricket. On the financials, Bajaj Finserv 1% down, Chola 2% down, IDFC 3% down, Muthoot, Shriram and Mannapuram 4% down, L&T Finance, LIC Housing Finance 5% down, M&M Finance 6% down, Jio 9% down. So what is required? So it's all what you call, it's all severe hammering all these financial stocks got. Insurance and cards, ICICI General 1% down, SBI Cards, SBI Life, HDFC Life 2% down, 4% down ICICI and 8% down LIC. So you can see that every stock has been hammered. Oil and telecom, Bharti and Reliance both fell 3%. On the IT, Cofor, TCS, Techem, Wipro 1% down, Affle, LTTS, Emphasis 2% down, Birlasoft 5% down. So today, Infi also saved the day. It remained sideways, but it saved the day. It held, it provided some amount of support, I would call, for Nifty. On the consumer goods, Asian Paints, Berger, Pidilite and Colpal 1% down, Bata and DMart 2% down, HUL, Page, PVR and Titan 3% down. ITC was a sole performer, star performer, I would say, like Dilip Vensakar I mentioned, right? 4% up. So it was a fabulous move by ITC. Otherwise, Nifty would have severely hammered today. Automobiles, everything fell. Maruti, Bajaj Auto, both fell 1 and 2% respectively. Bajaj Auto, Bharat Forge, Eicher Motor and M&M also fell 2%. Hero Motors fell 3%. Tata Motors 4%. TVS Motors and Escorts 4% down, Motherson 5% down. On the metals was a big down day today. JSW Steel 3% down, straight away starting itself 3% down. Hindalco 4% down, Jindal Steel 5% down, Tata Steel 6% down, Coal India 7% down along with Vedanta, NMDC 8% down, SAIL 9% down, National Aluminium 10% down. You can see the kind of fall that it had happened. See, where is the cover? There is no cover. On the health and pharma, Apollo Hospitals, Sun Pharma 2% down, Divis and Metropolis 3% down, Lalpath 4% down, Thyrocare 5% down. In the others category, Polycab 1% down, L&T and Havels 2% down, Jubilant Food 3% down, DLF, India Mart, Indigo, IRCTC, Nykaa 4% down, UPL, Zomato, Aries, Godrej Properties 5% down, APL Apollo 6% down, Adani Enterprise, Adani Ports, MCX 7% down. So with all these things, what do we expect for Nifty support and resistance levels? See, because with such a move, tomorrow is a fresh day. It's like this. Today the bowling team was in a good up move. Doesn't mean that tomorrow they will continue that. It's something like that. So tomorrow is another day, as I said, right? It's a fresh day. Hence, like the market will take some support. Where is the support it will take? There are good levels of supports that are seen, but the good, excellent support I would say is 2023 close, which is at 21,731 levels. Of course, that's a very good support, but above which is a 50-day exponential moving average, above which is the Bollinger lower band, above which is the 50-day simple moving average. That is the first line of defense available. These are the key levels that I would say one has to watch for. These are the levels. On the upward side, I would call like Monday 4th open. That's a very important level because it is a weak open, last week's open. So hence, no, that is something which will act as a good resistance, which is at 2403. So that is the level one can think of, because otherwise, no, all are above which is the exponential moving average, Bollinger middle band, 20-day exponential moving average, and then the simple exponential moving averages are there, the key exponential moving averages. So above which is this level. Hence, no, these are the levels that we are expecting tomorrow. And one more thing before, I would request people to understand one thing: market does not move on the basis of fundamentals, but moves on the basis of perception. Perception is nothing but mood of market. Mood of market is nothing but demand and supply that is accurately captured by technical analysis. Thank you very much.